once again to our weekly session on macro. I think it was a kind of an interesting day, as I think we are calling it Liberation Day 2, with Trump again increasing the rhetoric on the tariff, especially on the China, which was, I think, the as we have talked about multiple times, that China is the biggest trade piece, being the one of the biggest economy, one of the biggest exporters to US, and I think the most important trade deal, which was still pending. And the uncertainty in the market because of that resulted into pretty significant drawdown. And that is given that, if you remember, we have been talking about the frothiness in the market and the kind of run we had in last couple of weeks, or even I would say in last 4 to 5 weeks, where there was no significant correction which was sticking. So that means market was getting overconfident. There was a lot of, I would say, um, kind of, if you look at what the moves which we were seeing in AMD, Nvidia kind of stocks, or if we were seeing in some of the other smaller stocks, which are like, the popular stocks, it was going out of hand. So today, I think we just needed a reason, and this, I think, this whole tariff news has again spooked the market. So it's kind of, I would say, uh, yeah, we have to see where it goes from here. Whether it is a one day of liquidations or whether it continues. So let's try to figure out. Let's discuss what charts are showing us, what the market is showing us, and feel free to put your thoughts in the chat. And also later on, we will have a Q&A session. So in the meantime, let me share my screen. We usually talk about the markets and so on. So let me get there. Um, so this is what we are, where we are. So I always talk about the bigger picture. So remember that when you're looking at the market, the first thing which we always do is zoom out a little bit. It looks like a doom and gloom, but what we are seeing here, yes, it was one of the biggest red candle, but on the other hand, we are sitting on a huge rally. And this is kind of a decompression, which is you have to let go some steam. And the question here is, yes, whether this is structurally things are changing, or whether it is more of a decompression. So I would say uh, this is something which we have been talking about. Like, if you look at where the gold run has been and the asset classes are going up, uh, what we do see is that ultimately we tie it to money supplies, and how we have seen the money expansion. And if you were part of the investor day, we did talk about the long term why markets go up, because money is growing and so on. So that those fundamentals are still the same. Um, our interest rates are still low. I think we're still tracking the yield, which is basically staying below this trend line, which we have been talking. If you are joining this weekly calls, we have been talking about this downturn in 10-year yields. So easy money supply, we did discuss in detail in Investor Day. And I think, so macro is still the same. Now, the question is, yes, the biggest shock today was, people are calling it Liberation Day 2, which is, again, the tariff uncertainty, especially on China. And we have seen how Trump operates. We have seen that this may be a threat to get them to the table. Then maybe there's some negotiation going on in back end, which did not go well in terms of the rare earth deals which they have been negotiating. So the question is whether market believes that this is going to be kind of, this will continue to be uncertainty, or this is more of a weekend pressure point which will get released. And one of the things which we are looking at is, we were always talking about this run up since the last, I would say, even the earnings season and so on, and no deeper correction. So if you see throughout this big run, ever since we went through the whole April meltdown, we have seen some corrections. We did see some correction in late July, early August, but since then, I think none of the correction has stuck. So the question is, do we have a support? I think even if you go and correct all the way to 6100, which is basically the previous high from February, even then technically it will still be, we will still be in a just a pullback from the bull run. So the room for correction is huge. So there is nothing which stops us from going down another 3-4%. But whether this news is sufficient, I think usually what happens, which I always tell people, is it's not about fundamentals, it's about money flow. And the money flow is when you start seeing, if you go to the hourly chart of what happened today, market opened low and on a very high volume after the news, and there was no respite. Usually, you see all the previous pullbacks, you will see buy on the dip, and the buy on the dip crowd probably came in during intraday, and that did not help because now you start seeing liquidation hitting, and that's what resulted into, if you see what is happening with Bitcoin today after market, you see like we have not seen these moves. We have not seen these kind of huge moves for a very long time. Something like even gold, I would say, yesterday had shown us that there is some stress in, like there was some excess was being built, and if you see, even gold had shown us yesterday that there is too much of leverage probably in the market. But it gold showed us that people are still trying to go into the safe haven. So there was a reversal, which is a good sign that it was not liquidation all across. Gold and silver held on to their gains today. But in general, I would say usually the first day of big correction, which is like how frequently do you see Nasdaq going down by 4.5%? Means that this is one of the worst days of the day of the year, and probably will be counted in the top worst days in a decade. I would say this is more about when liquidation hit, there is no bottom, because now you're talking about all the leverage people are getting liquidated on the same day. So what we will really understand whether this there will be buying is on Monday. That's when we see how this evolves. But overall, as we talk about, there is nothing changing other than this whole drama of tariff, which has happened many times. We know that this is something which doesn't stick, because these are negotiation tactics of Trump, and we know that this will be resolved one way or other. But either way, as we always say, fundamentals are not driven. This is a money flow situation. We are sitting on a huge rally. It was due in terms of correction. In fact, there is more correction due, not at this pace probably, but anything is possible, because that's where all the up move in the market uh, gets into. You get markets get overconfident, and that's what we saw today intraday when people started buying the dip in the morning, and they got liquidated. So that's where we are. I think overall, we did see, I think if you look at individual stocks, we did talk about Nvidia hitting 195 recently, which was a new high. We saw some of the other stocks like AMD totally making new highs. So there was a lot of good moves even before this correction hit. So it's a matter of whether we are seeing this as a more of a correction. And reason can be anything. Reason can be your tariffs, or it can be anything, but it's a matter of that you need to release the steam, and you need to think about where do we go from here in terms of, we are still some days away from tech earnings, maybe another 2 weeks, I would say. Um, that will be the time when people start thinking about valuations. For now, there is no other trigger. There, we have a huge rally behind us, and we have no triggers. There is no. I think we have the Fed meeting is still due after a few days. So it's all of those triggers are still pending, and the because of the yields being low, I think there's nothing changing on the rate cut scenarios. There's nothing changing on the big picture view. So it's a more of a matter of news-based reaction today. Any questions? Feel free to put it in the chat. I think that's overall the summary of the market today in terms of where we are. Um, Second thing is, I do know that a lot of people um, when you're trading, this can result into a lot more of bigger shock into the market. Like for example, intraday, you will see that if you have a stock which goes down 6%, 8%, some of the mid caps have gone down much bigger. The question to ask is, we have been talking about this even during in the last couple of weeks and during our investor day, that how do you plan for these things, right? It's a matter of you need to have hedges, you need to have a plan, because and it's interesting that it happened this week, but we have been talking about this for last 2 weeks, that we do expect market to show you the surprises, because one way move which we have been seeing, like if you look at SPX moving up 10% on every quarter, this and if you look at the year to date gains, this has been one of the best bull markets in recent times. And this, even after you clean up this 2-3% or even 4-5% move, you will not see, like long term it doesn't affect you. But if you're a trader, if you are making short term trades, that's where I think you have to manage the risks, and managing the risks is the most important time which you have to focus on at this stage. So I will let people ask questions, because I think we did have a pretty detailed discussions on in Investor Day on overall big picture view, how people are thinking. And I think I would like to also share some pictures from the Investor Day. It was a great event. While we are waiting for the questions, let me quickly share. I think we did post these. So I would also like to thank all the people who came. It was one of the I think very good discussions. We had a lot of interesting. I think we did a workshop where we heard people's stories of their investments and so on, and it was, I would say, one of the most successful interactive session we had. So thanks to everybody who came in, and we are planning. The feedback has been that we should do it more often, so we are considering one more in December. If you are wondering, so just wanted to let people know that we will definitely announce soon. Our goal is to create more discussions and more, smarter way of thinking about investment in a bigger picture view. And today is a perfect day to think about it, right? Means it can spook people, it can throw you off when we have a day like this, which is where the market is melting down around you. When I'm sure, means, as I always say, I don't watch a lot of TV, but I'm sure they are talking about how bad it has been in the market, how it is, kind of a Black Friday or something. But it's a matter of keeping the perspective. That's what we believe in. And I think the perspective here is that we are still sitting on a pretty significant year-to-date gains. We had an amazing rally in last few weeks, especially in AI stocks. We did see that stocks like Nvidia, stocks like AMD, which are boosted by the recent AI trade. Um, and I think AI trade, when we are talking about, I think we did discuss even in our macro group, we have been sharing some of these thoughts about, what is really growing, what is the a lot of people are concerned about this circular investment. But on the other hand, if you look at the actual AI growth, which when you look at people who are generating revenues, now we are hitting that stage where application stage companies are showing the returns on that investment. The commitment on spending is not reducing. The commitment on AI spending, and we did have one of these charts, which and many analysts are showing us how the commitment all the way up to 2028. It's not even a view which is 1 year or 2 years. We are talking about all the way up to 2028. There are projections of continuous increase in spending. So the trickle down effect of that on AI stocks will continue. And I think what we are now going to see is whether this is going to be a like the biggest question which everybody asking is whether it is going to give the ROI. And every earnings, like as I said, the earnings are due very soon. People start analyzing when Microsoft talks about growth rates, when Google talks about it, when Meta shows the benefits of AI on their ad revenues and so on. There are a lot of hidden benefits because AI is so merged into existing products. Sometimes it's not very clear. You cannot call out when your cloud sales are going up. Is it just hyper? Is it just AI companies funded by VCs, which is happening, or there's actual end use case? So slowly we are seeing more and more analysis come through, but yes, there will be always be skeptics and people who are going to justify it. But in general, I would say it is not that simple. Unfortunately, it's not a simple answer today. What we know is that people believe in it, they are spending on it, they are expanding, and it's an arms race. Let's put it this way: like we are in a AI arms race, and that is definitely not stopping. And we will be very clearly know as soon as the earnings start trickling in, as soon as we start seeing forecasts of next quarter trickling in, whether it is semiconductor stock, whether it is networking stocks, whether it is, and then we have to look at hyperscaler earnings. So I think we are in the month of October. So whatever happens in next few days, if this correction settles down or not, ultimately the real test is when the quarterly earnings trickle in. So let me take a few questions in the chat. I see one question about the AI, which we are discussing right now, is what do you think this AI investments um, of each player into each other? I think this is the whole narrative of circular investment, if you are asking. So this is the interesting question because let me put it this way. There was a time when a smartphone boom was happening, and I remember because at that time we did not have social media, we did not have a lot of awareness about these things. But if you go back, how somebody like Apple and somebody like Samsung controlled everything because they were the two. All smartphones when after the death of Blackberries and Nokia's of the world, we had this whole consolidation around Samsung and Apple, and even like if you look at the display technologies or if you look at the Samsung dominated that, the memory technology. This is typically the modern world where we see a few players becoming very dominant. And with the kind of capital they are generating, they want to control every opportunity. Like for example, if there is investment to be made in any like XAI, OpenAI, and I think there was a great interview from Jensen a few days ago. He's trying to clarify these things on CNBC. I think overall what we are seeing here is that the amount of cash generated in modern world is so huge. If you are dominant today, you don't want to take chances, so you go and spread your investments. And the benefit of that is, of course, that you're also getting commitments for continuing to use your technology. For example, NVIDIA got a commitment from OpenAI to get into their next generation of Rubin beyond Blackwell. Similarly, OpenAI is trying to do their own by saying that I want to go and dual source, because ultimately we are limited by capacity, right? Means what we heard is AMD is clarifying that they are going after 2 nanometer node, while NVIDIA has totally taken over the 3 nanometer supply. And between Apple and NVIDIA, you have very limited chance to grow. So AMD is going after the 2 nanometer now. So overall, I would say this is where this it looks like, from a layman perspective, yes, people are talking about circular investment, but remember, the players who are dominant, they will try to control everything. They will try to go and invest. This is very normal in modern world, and I don't think it's very any different from what happened in smartphone world. I means there are a lot of vendor level investments. There are a lot of cross dependencies between these big players like Samsung and Apple. There was a lot of control which goes on around how the foundry relationships are made, how the memory relationship. If you go into the details of how the memory vendors operate, there's a lot of cross investments from their customers into their own supply chains. So I don't think this is anything unique about AI. And the winners are the winners. They will keep investing, and they will not leave any stone unturned to leave room for competition. So that's what NVIDIA is doing. That's what OpenAI is doing. These are the dominant players, OpenAI in the app space and NVIDIA in the semiconductor space. That's what Oracle is trying to do. And so I would say, yes, I know that the discussions are mostly this becomes memes and so on, but it is common in the business world. So I won't worry about that. Ultimately, what is the truth? The truth is that there's real capacity being built. There's real data centers being built. The only missing question is whether the use cases and the app level revenues will be able to scale up as per the promise. And I think that's where most of the skepticism is in the market. And everything will fall apart if at some point people stop justifying that. So I think let me take a few more questions. Let me see if there's any other question on AI first before we jump into the other questions. I see questions on type of AI capex, whether it is going from revenue finance to debt financed. I think there was a very good chart which I saw a few days back that I think around 8 to 10% of the total investment grade debt is taken by some of these AI hyperscalers or some of these big tech players. But on the other hand, whether it is debt driven or whether it's revenue driven, I would say it's very difficult to directly correlate, because as we have discussed, hyperscalers, they are using a cash flow from their existing businesses. And we did share one of the metric in Investor Day, which we were talking about, the percentage of cash flow they are investing into CapEx. So now it's not directly correlated. So from a AI investment perspective, because it's futuristic, everything can be considered debt or from other businesses, from cash flow. So I don't think there's a good way to look at it, because it's very unfair for people to compare AI as a new technology. It's not a new use case. It is going to change existing cloud use cases. It is going to change. It is going to go change every aspect of every business. So I think it's a matter of most of these cloud players and hyperscalers, they are mostly justifying the gain in their existing businesses using this. So whether you call it revenue finance because they are using free cash flow from their internet businesses or existing businesses to fund it. But definitely there is a big portion of debt which is growing, because the commitment on investments right now by the four big players, hyperscalers and Meta, is way beyond what they can generate in cash. So yes, the debt portion will increase. Probably they're waiting for rates to go down to increase the debt, and I do expect the debt to increase if they have to keep the funding going. So I don't think you can keep, if you only look at free cash flow, I don't think they will be able to keep up with their promises for investment. Let me take a few other questions now on SPX in general. So I do see a question about SPX puts and any indicators for people who bought. Again, these are speculation. I would say there are always people who are speculating in the market. Let me not get into who bought it and what. First of all, none of these metrics are real because um, because there is no public information. If you buy, I buy a huge quantity of puts, huge quantity of puts. I don't think brokers are allowed to tell you. So all these are speculations. So let's not comment on that. Um, then we have question about SPY and Nasdaq broke 21-day EMA. Um, yeah, so I think buying. So this is a good question. So it's about buying the dip. So it's a funny thing, right? So it feels like we have been talking about a great market, and if you see, we have probably not even gone down to like 3 weeks ago kind of market numbers. Buying the dip is not a great way to think because if you are in the market, you have to stay invested anyway. Because as we always say, if you miss out, like let's say you wait for it and Monday we open up 2% up on SPX, then I think you lost the opportunity already, right? So, and there is very good chance because of the liquidations and because there's always this cash settlement on our day, next day, that we may have a follow-up selling on Monday. So you don't know and nobody knows, right, how the Monday will open. What if over weekend there is means Trump was using this as a negotiation tactics because of some meeting happening over the weekend, and there is nothing which happens. Like right now, he's just threatening, right? Nothing has changed in terms of tariffs. So my view is very simple that uh, we have done like after a 50-60% rally since April lows, we have only lost what 2.5% on SPX and 4.5% on Nasdaq today. Um, this is the if you were invested, you have not lost much anyway in a big long term. If you look at Nvidia, it's still like 185. We're talking about it has run up from 85 as recent as April. So I would say technical analysis is only useful in de-risking and stacking the odds in your favor. You don't know when is the right time. So it's a more about risk management, as we always say. You buy and you make a plan and you manage the risk around it. If you even if you buy a local minimum, which is a good dip, you're still higher from 1 month ago or 2 months ago. So I don't think buying the dip is a good way to think about it. But yes, if you are planning to increase anyway, yes, these opportunities are good. You can pick your stocks and decide. Again, I don't want to comment on individual investment advice. Um, so where are technical resistance level for current drop and bounce back? So we did discuss a little bit. So I think people who are joining late, let me also share again because this is, I think, I understand that people have a few more questions around it. So we did talk about this chart. So let me go back to SPX chart. So it's a good way to think. So I always go back on a daily chart, which is much more zoomed out. And as we always say in technical analysis, there are two things, right? One is that in a long term, this was the top, which we is the most important one, right? The previous top, as we call it. This may not be the straightest line. I'm doing it, you know, pretty quickly. And the second thing which we say is, of course, the trend lines and the 200-day moving averages. So I think in terms of, let me not even get there. Let's talk about 200-day moving average. First of all, the potential drop if we enter a correction period can be, we call it reverse to the mean. When you come to the 200-day moving average, that is typically in the technical terms is called reversing to the mean. We have been running up too fast. And we are left behind 200 moving average, which is still around 8% or maybe 8 to 9% below our current levels. So when you have so much, distance from your mean in terms of prices, technical analysis you can do on hourly basis, you can do on minutes basis, but always remember the big picture. The big picture is that we are sitting on a huge run up. We are sitting still after a huge drop, we are still sitting almost 10% away from your mean, as we call it, 200 moving average. We are still sitting on as recent as this was all time high, by the way. Let me remind you, when earlier this year, after another huge run up over multi-year bull run, we were sitting on 6100 as all time high. So all these levels are not going to change that we are in a bull run. So if we drop technically to these levels, if we drop to either 200 moving average or the previous high, which is 6100 or 6000, let's say around 6100, that will still be technical people in a long run scenario will still call it as we are in a bull run. So from that perspective, are we, I mean, there is no justification that we will stop here. But of course, if you look at more hourly charts and so on, there are a lot of support. So I'm not suggesting that we are going there. I'm suggesting that there are a lot of support. If you look at it, we have a kind of a double bottom which was formed around another 200 points below. In fact, it will be very interesting that today we closed exactly on the when the rate cut began after the end of the day. When we closed, we and the low we made after the press conference, it was exactly this level. And then we continued going up. This was when people thought that Powell is still kind of hawkish and so on. So what I'm trying to highlight is even at the current level, there is a good support. So one best case scenario is that Monday we bounce back. There's some good news, and technically it will be perfect test of that low from when we actually started cutting rates, and we made a intraday low. So technically there are a lot of support in between, but at a bigger picture level, you can fall all the way to 6100, and you will still have a bull market intact. So that is way of looking at it as a um, how the technical analysis works. And this is where we say that the charts don't predict the future. Charts tell you a commentary on what is happening. People who read chart and try to project, they are telling you the odds. They are telling you where a lot of other people will see. And this is what we call as the consensus estimate, right? People are looking at the same chart. People have historical statistics of how the support level work. And some people will suggest to buy there. But if the selling pressure is more, you will break that support and you will go down further. So these are more of a commentary. They are not predicting anything. But yes, they help you. They help you understand, make a plan. Because if you make a trade around support level, the way to think about it is you made an assumption that a correction will happen to a certain level, and then you got proven wrong. Now, that what market is telling you when support is broken, resistance is broken, is that you need to reset. Market is not giving you guarantees that market will stop at that support. It's just giving you a trigger that now you were wrong and you go and change your plan. So that's what most of the smart traders use technical support levels for, not for saying, yes, market will definitely drop till there or market will reverse from there. They make a plan to say, there's a good chance it will do. I make a trade which makes me money if it stops there. And if it doesn't stop there, if it breaks convincingly, I take my losses and I try again next time at the next support. So that's how people trade using technical analysis, and not they are not trying to predict. All right. So I hope that answered your questions. If I took it wrongly, do feel free to add further on this. So let me go down the list of questions on the technical analysis, and I hope if you have any other follow-up questions, feel free to put it in the chat. Um, so I do see another questions on, yes, so that is true, that is what the market dropped about. So yes, the tariff news is true, but this is more of a rumor. Not let me not call it rumor. This was a Trump threat. It's not something which has changed. My understanding is, I may be wrong because I'm still catching up on the news. But based on what I understand, it's more of a threat to China and not something executed. And so this is actually not even a big fundamental issue at this stage. And even if, let's say, something is implemented, let's say they actually raise the tariff, we all know. In fact, Scott Bessent himself has gone on CNBC's previously when the tariffs were at 150% or 100% plus. He himself said that these are numbers which we will be always be negotiated down, because everybody knows. And as I have explained in April time, if you were in these calls, when somebody talks about 100% tariff, it's more of a blockade. It's not a tariff. Nobody's going to pay 100% tariff. As an importer, what you do is, if you see that number, if it's actually implemented, first of all, it's not implemented, you basically hold on. You don't take deliveries. You don't go to the port and get your um, your goods released. So this is more of a threat for a blockade. And when that happens, this is more of a negotiation tactics, because everybody understands that you cannot live without Chinese goods. Everybody understands that this will not stay. So the question is, we just use this excuse to go release some pressure. And markets are leveraged and markets are overconfident. So that resulted in a bigger drop. But otherwise, now the question is whether this continues because of the pressure from the liquidations, because of the people who lost money today, who have margin calls sitting on their accounts. they wake up on Monday and market is still in the bad situation, they may have to liquidate more. This is why the whole markets are linked together with each other. So there can be follow-up selling, or we may see some news coming out by Sunday night that, you know what, China agreed to something and there is a new agreement. So anything can happen on that. So I don't think there will be a lot more of this. Right now, it's probably war of words. Probably it is serious. Probably there is the China US deals are falling through, and that is expected because market was. If you remember, after April, May, even though we had talked about this many times that the biggest trade deal which matters is China, but how it materialized? How it materialized was there were always high tariff, 160%, 170%, and they kept on delaying. They kept on delaying by 30 days, by 60 days, by 90 days. And we are probably very close to that latest deadline. So those high tariffs were always there. They were postponed because they were negotiating. And US and China are both of them are playing the strong card because US is one of the biggest consumer and China knows that US cannot live without Chinese goods. So these negotiations were never going to be easy. This was expected. It's a matter of just market got complacent without getting a trade deal just because of these delays of every 90 days delay on tariff holds. And we by now we know very well that both Trump and China, they are not going to buckle down. They are going to keep threatening each other. So this is more of a, I would say, market is releasing pressure because now they are again starting to price in the uncertainty today. And rest, as we discussed, is more of a money flow. Rest more of a liquidations. So how fast it drops usually is defined by how many people get liquidated. Like I'm sure you will see in next few days the news of which hedge funds got liquidated, the size of money betting on. Like we are very actively involved in options market. We are very actively involved in working with some of these institutional players, and we know that the leverages are high. We know that markets are the size of the derivative trading is increasing every day. So in this market, short-term price cannot be determined based on fundamentals because short-term if you are very heavily leveraged and you are liquidating, and there can be hundreds of billions of liquidation which can happen within 1 or 2 days. That can create a price pressure, especially in an environment where people are scared. So let's say you are getting liquidated and retail is looking at the news of Trump threatening again the tariff wars of April, and nobody's buying. And this is what happened today, by the way. If you look at, there was a lot of buying at the first drop because that is the usual thing in this cycle. Every day there used to be a drop of 1 2% and people used to buy. But what we saw is that some of these big players continued liquidating, and the drop became accelerated because the liquidations are way more than the purchasing power of the big dip buyers. And probably because we are so heavily invested already in the market in last few days and last few weeks that it had to go and we call it deleverage. So I think this is more of a deleveraging exercise. Where do we stop? Nobody knows. It's more of a matter of how do you plan your risks? How do you plan your trades, knowing that you don't know where the market is on Monday, and it can be a good support as we discussed on the technical charts. This is a great last month support. Also, we can be maybe 10% away from the support. We might fall all the way to 6100 as we saw. That was another great support area, that band of 66,080 to 65,150 or so. So we did look at those charts. We did talk about it. So both are possible, and it's all about trading with the hedged plan where you know that market can go down further, and nothing fundamentally has changed other than this whole war of words. And both parties have already shown in last 6 months that they want to solve it. And uncertainty is back for sure in short term. And till that is resolved, we will be all living through this volatile cycle of news where one day there will be a positive news, or another day it will be a negative news. And depending on the leverage in the market, we will see how fast we move up or down. So another question I see is, was there any rotation into safe haven assets? So I think it was very obvious. We saw gold and silver going up today. We saw bonds going up today. So usually that's always the case. I think it would be interesting to see next week because, as I always say, one day of price action is not really meaningful. But yes, if you want to make sense out of it, so today We did discuss a little while back that precious metal were up, bonds were up. So yes, there was some rotation. But usually rotation makes more sense when you see multi-day data because even the settlement of funds doesn't happen, and not all funds are doing everything, right? Means if you're equity fund, you're not doing bonds or all these precious metals sometimes. But in general, I think that's a typical behavior of the market when panic strike. Uh, at least a big chunk of capital try to park funds into safer assets. And yes, we did see gold, silver, bonds seeing a lot of buying. And as I think we were talking about, I think one more topic which we wanted to discuss was crypto and Bitcoin. We did see that Bitcoin is becoming more and more of associated with the equity market as the ETF sizes are increasing. And also the investor type is very similar, right, to Bitcoin, of the equity people who are highly leveraged. I think that's where we saw the volatility. But in short term, I won't be surprised if another day of selling in equity happens. I won't be surprised if even the gold gets liquidated, even silver gets liquidated. We have seen this before. We have seen this in Liberation Day. We have seen this in even COVID time. It was a perfect example when the panic was high. Safe haven works in a longer term. It doesn't work in a 1 2 days or 5 days of market data. The reason being, um, there are a lot of multi-asset players out there, and when liquidations happen, you have to sell. Like there are big hedge funds which go out of business in these kind of big moves in the market, and when that happens, sometimes you have to sell everything, even if you're a multi-asset player. So in modern day, I think we have seen multiple times that all assets are correlated when panic strikes, and most of the decorrelation happens over a period of weeks, months. And yes, definitely, I'm also equally excited about seeing where the equity goes from here. Whether, as we have discussed multiple times, that fundamentals haven't changed. Macro is still in favor of risk asset going up. Now, valuations are always a question mark. Relative allocation is always a question mark. So we have seen recently that gold has gone up. I'm sure if you're looking at endless data, they're showing how, and we even posted on our macro group, how the stocks are actually the worst performing versus gold. Gold has beaten all other asset classes, uh, except for, of course, Bitcoin, which is a shorter duration asset class, which did not even exist in 2000. But when you look at the data from year 2000, gold has actually beaten all equity indices. So, from that perspective, I think it's very clear that in the modern day of money printing, the safe haven assets are doing better than the risk assets. And during Investor Day, we talked about how the productivity has been low and how the stock markets have a potential in future. And AI trade is showing us, like if you look at stock market in general, yes, they have underperformed gold. But if you look at Nvidia, if you look at tech stocks, like if you were investor in year 2000 in tech, I'm sure you would have beaten gold also. So I think that's where it's very difficult to take things in general when you say safe haven assets. Um, you can always pull out a data which justifies one view versus other. I always talk about changing the perspective and asking yourself. That you can always pick a different point of data and you can give a totally different answer. That's the unfortunate reality of finance world. So let's switch gears a little bit. I do see some questions on crypto here. So there is a question around Zcash. So Zcash is a privacy coin if for people who are uninitiated. So let me quickly take that question. So this is basically uh, I do see a lot of activity there because of privacy concerns once again, because as you know that there is a and let me relate it to very interesting data point which I because I am very heavily invested in crypto industry because I did spend a lot of time there in last 5 6 years. So I was talking to one of the friends from there and they were talking about how we are seeing a huge amount of crypto technology companies which are going to come out. Like we have already seen the digital asset treasuries. So this was one of the topics we had identified for today. So let me take a bigger picture view before I jump into the Zcash question. So what is happening in crypto world right now? We have already seen that we are in a Bitcoin bull run. We have already seen that there's a lot of demand from ETFs. We have seen the demand for all these treasury companies which have built up, which have gained billions of dollars. And now what else is happening is you are seeing all the exchanges like we saw Coinbase already being in news. Then we have Gemini coming with IPO. We have Kraken coming with IPO. These are all US exchanges. We had Bullish, which was a fringe small exchange, which had a very successful IPO. And now what we are seeing is companies like Consensus, which is the founder of Ethereum. We have companies like Chain Analysis, which is coming out. Now, why I'm talking about it is in the context of Zcash is because people are now learning better about blockchain. People are also learning that Bitcoin, the whole narrative around that Bitcoin is for privacy, for crime, is falling apart because people are seeing that Bitcoin is probably the most public chain where everything is so much public that chain analysis is a perfect example of IPO, which is coming. And Wall Street is learning first time what is the chain analysis, what is the transparency of blockchain. And suddenly, what happened is the narrative is shifting towards how Bitcoin is actually the worst thing for crime. It is probably the best thing for implementing, fair and public transactions, which are and avoid crime. And that's what happens right now. Zcash, which is actually a privacy chain, which is a coin which are designed to be private, where you are basically avoiding getting caught who sent the transaction. That is getting attention, and that's normal, I think, in the world. Means people want privacy, people want there are enough criminals out there, but even without criminals, I think we all understand that as a person you don't want your transaction to be on chain. So yes, there is a whole narrative shifting again because people are learning, as you have always this news cycle after every new crypto conference. In last few months we have had this big conferences happen, and I keep hearing the outcome from there, and people are learning that slowly blockchain is becoming normal, Bitcoin is becoming normal, and learning about it is that this is all public and it is very easily trackable. So Zcash has suddenly got into discussion again for privacy people. So this is what we are seeing. I don't think it's anything different. It's every cycle it happens, but I don't believe that there is appetite from most of the developed countries to support privacy-based chains. The reason is same because anything can change, but one thing is for sure that the biggest law which matter is anti-money laundering or KYC. This is not going to change. Any go like even Trump administration or any administration come in, they are not compromising on that, and that's for good reason because there are a lot of bad use cases of crypto, which are, if you give them privacy, you will have all kind of terrorism financing and all kind of bad things which can happen. So I don't think that has changed. So I don't believe that there are legs to any of these privacy coins, even under a crypto-friendly administration today, which is still implementing very heavily the KYC ML rules. So yes, it is gaining attention. So to answer your question, maybe it was a long answer for the question. Yes, it has woken up. You are seeing a lot more discussion around privacy coin, and some of the old timers, they're promoting privacy coins all over again. But I don't think one should look into that because most of these things get banned in long run because nobody has appetite to enable privacy-based transactions. So I don't know if I answered your question, but that's my take on what is happening in this world. So let's get back to some other question on the general market. So I do see that there's another question about are we essentially stuck in a value preservation market? How long do you suppose it will be this way? I'm not sure I understood the question when about the value preservation, because as we have discussed multiple times, we are in a very, very selective bull run of AI trade. We have discussed multiple times that wider market, if what people used to call it value investing, whether all that has suffered, the wider indices have suffered. So maybe you can clarify your question, but overall, I don't think this market is anything other than but AI bull run. And is that changing? Probably not. We have seen it in last couple of weeks. We have seen with the market price move of AMD, Nvidia of the world. We have seen even in the private equity world, when you look at OpenAI valuations, when you look at XAI valuations, when you look at all the other AI companies, I don't think it's changing. Nobody is willing to back down. Every person who controls big amount of money is only talking about, even like people like Blackstone or BlackRock and all these big people, the private equity players, they are very heavily looking into AI. Even the real estate investors are looking into data center investments more than anything else. So I think it's a single dimensional market. And in other words, it's a single dimensional hope for the humanity in a way. Like, people are betting everything on AI, whether it is productivity increase, whether it is, the whole issue about population going down. People are betting on robotics and AI together, fixing all the problem of the developed world. So, and it makes sense because if you remember, when I used to do macro sessions 3 or 4 years ago before AI, we used to all talk about why, like, populations are going down in Western world, the why India and China are going to be dominating in future, and that was all because of population mix and the, we call it demographics, as we call it, the younger population. What AI and robotics are the promise, which are saying to the developed world that you don't need those people, you don't need demographics. You can replace humans, software engineers, with AI. You can replace actual humans for physical labor with robots, and that is one way of telling you. And this is what is happening now. This is where they're saying we don't want to be dependent on China. The deglobalization is happening. We are talking about we don't want to be dependent on China. We don't want to be dependent on India. So this is where I think the world is betting everything on AI and robotics. So that is what the markets are right now. I don't think that is changing anytime soon, but I don't know exactly what your question was about the value preservation, because right now it's a matter of just betting on the single horse. And the expectation of this market is that with this capital available with hyperscalers and with players who are betting all the money on this AI and robotics, the world will change in next 5 to 10 years. And it will start showing productivity. It will start showing the benefits of it. And we will be in a very similar boom as we saw after internet, where we had all this derivative industries of cloud, smartphones, all kind of apps and gig economy, all that probably will be developed on top of AI. So that's where I think most of the big picture view investors are thinking right now. Everything else is noise. Everything else is everybody's asking the question. If you are invested into any asset class, people are saying pre-AI and post-AI view of that. Whether it's hype or whether it's reality, we will not know today. We will only know in hindsight. Um, and um, in terms of safe haven investing, or now that you have clarified the question is about the precious metal and crypto, that is more about, we have talked multiple times. We are growing global money supply at 8% per year on an average. In some years, in last few years, we have grown at 15%, 20%. So this is more about the narrative of where do you store your value. So there's a difference from investing and store of value. The whole precious metal and crypto is not investment. This is more of a store of value, where people are trying to hold their capital when they don't know what to invest in. So people who are investing in Nvidia, they don't care about crypto or precious metal, right? They care about AI story and growth, and Nvidia will always beat it. The challenge is they don't know. They don't know whether Nvidia will be the winner. And people who are going into precious metal and crypto, they are saying, I don't care. I don't believe in anything. I want to preserve the worth of my money. That's what we call as a store of value investment. So they are doing store of value investment. And yes, you can call it as a preservation of value, but typically in the finance world, we call it as a store of value. So yes, gold has shown to be a great store of value in a longer run. It has shown a very poor correlation of store of value in shorter run. Like if you see from 2011 to 2000, even as recent as 2022, gold was flat. Means we were around that $1,900 peak into 2011, and it was a long period of 11 to 12 years for gold to break out. Now, in short term, and same thing, Bitcoin has this 4-year cycle. None of these things have worked out in a very short period. Like in 3 to 4 years, you can lose 80% of the capital or 50% of the capital, and you're not even beating inflation. But as you increase the time period, gold, Bitcoin, they have been proven to preserve your store of value and beat inflation, beat many other valuation metric or money supply. But people who are speculative in nature, who invest, they prefer things in trends like AI, trends like others, like which we are talking about. So these are totally two different discussions. I don't think there's an overlap of investment between somebody who's investing in AI trade and somebody who's investing in metals or Bitcoin. So I don't know if I answered the question. I know that A lot of people right now are posting this picture of U.S. Treasury investments by foreign investors and the foreign sovereign governments. I call that as a very different question. It's not about things are changing. If you look at 50-year view, gold was always the highest reserve currency. Dollar was never. Um, the whole dollarization of the economy happened because of globalization, and we have discussed multiple times that mostly it is a deglobalization which is happening, which was actually always been the case. We only had this last 30 years or so, which was the era of globalization. If you take that out, the world was never globalized. People were always very, very, or maybe you can say another 100 years ago, probably we were more open. But then, since the world wars, since there was a big period when we were not very global in nature, we had this whole Cold War of big Axis players, and then we became globalized after the Cold War ended, and now we are going back to those Cold War with Russia. Oh, sorry, with China. Earlier it was Russia and US. Now we have these two economies emerging, US and China, and we will see this Cold War continuing, and probably we'll go back to that. So that is reflecting in your assets, like where China is saying, I don't want to hold US dollar because now US is openly an enemy. So they are going to, why would they hold US dollars? I mean, that doesn't make any sense. So, and then when India is looking at it or other countries are looking at it, they are saying, means we can be in the same boat as China very soon. So that's what is happening right now. So I don't think it's saying anything more than just the geopolitics of it. Otherwise, dollar is still the strongest. I don't think there is any threat to dollar for the reserve currency. But when you say reserve currency, it used to have two meanings, right? One is the currency where most of the trades are done, that is not changing. Then there is something called what are the governments holding, and that is changing. Yes, there are more gold holding now. But by the way, that is not because they are reducing dollars. That is because gold is gaining price. Gold has doubled. So even if you look at today's gold reserves of those countries, if you look at it, if you normalize it in terms of number of ounces, they have not really increased that much, which probably they have increased dollars more. So remember that thing when you compare those charts, which are being posted around these days, that one day means that is bound to happen because gold will always gain in price. And this is more about dollar devaluation more than the choice of the investor. So let's take one or two quick questions. And I think we are running almost at the top of the hour. Um, I see one question about, are the markets outside the US impacted or they are muted? So as US is usually, so if you're talking about today's reaction, we will only know on Monday because US is the last market. Most of the markets are closed for the weekend. We will know how it will, how this will impact them because ultimately, if US-China trade war is not resolved, it impacts everybody. Because by the way, nobody has got a deal. Like if you look at India, other than EU, which anyway is in a totally different economic cycle, or even Canada is still negotiating the deal. Even India and China both are negotiating the deal. So yes, everything is going to be impacted if the trade war concerns come up again. So I do see that that's not going to be pretty with what happened today, because uncertainty nobody likes. Because where were we till yesterday? Everybody was feeling like things have settled down from April. There are deals in offering, and the rhetoric was gone. Those were threats. Those were, and to be frank, even now it's a threat. So I don't think there's anything fundamentally changing. It was an overreaction. So you may see people becoming smart about it over the weekend, and there is no reaction at all in foreign markets. But in general, I think U.S. markets have done best in last few years because of one simple reason, that U.S. is leading in AI, which is the considered the future. So if you look at outside AI, probably all markets have done bad. And I think that's where I keep going back to the whole idea that currently we are in an AI boom and not really anything else is happening in any economy. And that is what has happened in last 2 3 years. Uh, as you remember, in 2022, 2023, most of the big banks were predicting a recession. Most of the big banks were, looking at the historic data and not reading the room about the AI. And they were all, pessimistic. And now we have turned the tables. Now everybody has become too optimistic. So probably we are overheated. Probably that is what it is all about. But that we will only know in hindsight. Nobody will know what is the top unless we are, 3 months after the top. So I think it's a matter of just waiting and watching, not trying to predict. One day is not definition of the market, and probably next week by Friday we will have more data. And more importantly, remember that everything can change by the time earnings come out. So just to summarize, we did talk about at the start of the call. Um, this was a knee-jerk reaction to a bad news. This is something which we have seen before, so we know market is already prepared for what is coming. And the real data changes when either some kind of a bad trade deal happens, which is not as per the expectation of market, or we have uncertainty continuing, which will keep market here. And the third thing is everything changes back because we are in an AI boom. In 2 weeks from now, when the hyperscalers start coming out with their earnings, everybody forgets this, and people say, you know what, these are great deals, and AI trade is still here. So let's see the market. Let's, as we say, right, the investing is all about how you react, not try to predict. Nobody knows what's going to happen, but if you plan and react in a nice, smart way, not panicking anytime, because these are normal. Big drops are as good as the market going up every day for last few weeks and months. I think this is just a natural cleansing of the froth and of the leverage. So we should welcome it, and we should just make a plan around it. So that will be my last thoughts on today's action. So I hope you guys are uh, going to continue engaging on our macro channel, and bring your friends there. I think our goal is to make sure that we are never. Actually, today is a perfect example that we want to talk about, that we don't panic and we don't change course of action because of one bad day. We just have to plan for these. And this is exactly what we talked about 2 weeks ago, and even in our investor day last weekend, that markets can give you a big drop any day. You have to plan around it. So thanks once again for all those who joined, and yeah, let's continue discussing this and continue having a good conversation over our macro WhatsApp channel and many other forums if you're a subscriber. And we will get you again in next week. Have a great weekend. Thank you. Bye bye.